CPI report. Is Trump causing this recession so he can buy this dip even further and all of his friends, and the setups for us option sellers to be looking at? We've got a lot to cover today, guys. So without further ado, let's go over the shoulder. All right, guys, don't forget, one lucky commenter down below is going to win a free one-on-one option strategy call with me. Just drop a comment and tune in tomorrow to see if you won. But guys, we got a lot to cover. I don't want to waste your time, but man, it's like every single morning I wake up, I come to my desk and I'm just like flooded with news stories. It's just wild. So we got a lot to cover. Make sure you watch this whole video because we're going to be covering a lot of things. So guys, first and foremost, we are now testing the 300-day moving average on the S&P 500. This is another massive support level. If we cross below this, we're going to see even more blood in the streets. At the end of the day, you guys are probably going to think, hey, what's going to happen, right? Nobody knows. Anybody that tells you what a stock is going to go up or down or sideways, I think we're going to give back basically all the gains we have over the past year. Right. I do believe that. So if we look at like the past year here, we're up about 9%. I think we're giving that back and we're going to go below that 300-day moving average. And it's going to be a bear market, right? We're going to be a bear market. Now, the average bear market does last about 11 months, some shorter, some others, but historically, if we average them all together, it lasts about 11.1 months, which I've shared in yesterday's video with you guys, that report. So go watch that if you're interested to see more information on the bull and bear markets and how long they last. But with that said, we have to stick to our plans and continue to dollar cost average into great companies. And we're going to get into the setups in what those are, right? And if you're not going to do individual companies, my recommendation is just major Vanguard index funds like VU you're seeing here, VTI, VUG, like all the V's can be yours, all right? So again, even NASDAQ, right? It actually was below its 300-day moving average, but we had a nice pop-up this morning. Why do we have a nice pop-up this morning? Well, because CPI report beat expectations. We'll get into that in a second here as well. Okay, lots to cover. But just like I was telling you guys 2 weeks ago, pay attention. Like, I can't stress it enough. Pay attention to the 200-day moving average. If we go below that, that is bear market territory, right? That is bear market territory, staying below that 200-day moving average. We have been below our 200-day moving average, this 526. If we get under this 300-day moving average, it's going to get worse. It's just going to get worse. That is the support level I'm paying attention to every single day now. So pay attention to it, okay? On both, especially the S&P 500. Obviously, we already touched below it here on QQQ, which is a very big news. So the next thing that everybody is talking about is Trump causing this recession. Is Trump causing this massive pullback so all of his friends can make a whole bunch of money and get in at good prices, while the dumb money, literally, this, guys, go watch that movie called Dumb Money on Netflix. I think it's still on. Fantastic movie on the whole GameStop thing. But that's what they call you. I mean, I always have the news on during the market here in my office, and that they literally were just calling all retail just dumb money, right? Is the dumb money like is hey, like the one guy was literally saying, he's on TV still right now. He was basically saying, I was at the barber shop, and or not barber shop, but at a bar, and the bartender was asking for stock tips, right? That's when you know you're at the top. Right. And one thing I didn't have up here, I talked about it earlier, or even for a while now, was Trump Warren Buffett was sitting on like boatloads of cash, and still is sitting on boatloads of cash. Right. Look, I got Warren here right next to our juice button. Like, Warren Buffett is somebody I'm always paying attention to. If he's sitting on cash and all the dumb money and retail is just pouring into companies, you should be scared, right? You should be extremely scared, but everybody thinks they know better, right? Like, no, like, Warren Buffett, I guarantee if you were sitting right next to him and getting stock advice from him, you would take it more seriously, but you can learn from him. Like, I consider him and Peter Lynch like my virtual mentors. Read all of their books, and I like to get on companies on fundamentals. Like, that's what I focus on. I want to be like, of course I'll get caught up in the hype and stuff here and there, but at the end of the day, the fundamentals win long term, and we're seeing this happen right now with these overinflated valuations on a lot of these growth and tech companies. So, do I think that Trump is purposely causing this recession? No, I don't think Trump is purposely causing this recession so he could buy this dip massively and make a whole bunch of money. I don't believe that, okay? And trust me, I got my own fair share of conspiracy theories I believe in. What I think is happening is he's doing what he said he was going to do. The Doge initiative, the tariffs, like all of these things he's doing just in a very condensed collapse time frame, which the market is reacting to, okay? So, he also said, I mean, go watch this interview, love him or hate him, whatever. This isn't a channel of politics. Again, for me, all I care about is America. Like that's all I care about. Our country, and whoever is president, that's who's president, and I just adjust to that, right? So you go watch this though. You just type this headline into Google, and it's like about 12 minutes. So definitely worth watching if you want to kind of learn more about it. Obviously, the tariffs went into effect today. It was going to be 50%, but now 25% tariffs on steel and aluminum. So that obviously is now what we are reacting to, right? This is something I was talking about in the private group this morning. I go live there every single morning at 9, pre-market premiums, I call it. But we don't even know, like, the feeling of what these tariffs are going to do and the retaliation on the tariffs we're placing. Like, we don't know what that's going to do yet. Like, it's all headlines right now. We don't even know the impact yet. And that's why I think a lot of the things, like, as they aren't getting resolved, as these tariffs are into play, as things start getting more expensive, like, we then start feeling the hit. Okay, then we really start feeling it, right? Another thing is this, and I'm sure you guys have heard it, but the $9 trillion in debt, which is coming due for America. A lot of and at least this is so I'm just gonna kind of blurt this out. What I think, obviously, Trump is trying to do, right, is for the Fed to cut rates, right? And if the Fed cut rates, we can refinance this $9 trillion in debt at a better rate. Like, end of the day, that's the play. I believe that's the play, right? So he's doing everything he can to get rate cuts, right? Not difficult to understand. So we're gonna see what happens, okay, with that. So CPI report was released this morning. 2.8 versus 2.9 expected, and the core 3.1 versus 3.2 expected. If you guys don't understand what CPI is and why it's actually important, I do go follow me on X. I usually post there like live stuff, but basically, like, I just did some quick write-ups for you guys that don't understand what CPI actually is, because I know some of you guys are new and don't really understand it. So basically, CPI is a fancy way of saying, are prices going up or down? If it's higher than expected, the Fed might actually cut hike rates. Stocks are going to dip and premiums pop. Lower stocks pump, more volatility, better trades. And basically the headline CPI 2.8 versus 2.9 expected. This includes everything: food, energy, housing, all that stuff. And it's the broadest, right? That's the broad measure of inflation. And the core is 3.1 versus 3.2 expected. And this excludes food, energy, since they're more volatile, and gives you a cleaner look at inflation trends. Okay. Here's the big thing I want you guys to pay attention, because you guys know I like airline stocks. That's where I made probably the most of my money during COVID, was airline stocks when they took a massive dump, okay? Airline CEOs warn domestic travel demand is slowing. What did I say? And now, again, I'm not a mind reader. I just report to you guys what I do when I'm out there, because I do leave my office very occasionally. But when I do leave my office and I speak to normal human beings in this world, I like to actually listen to what they're telling me, and then I take that information and I use it to my advantage. I've spoken to family members, friends, my barber, right? And they're all fearful of flying. And this was like a month ago. I was like, I wondered, that's going to do something, right? And if they're feeling like this, right, the people the normal people that make these airlines the most money, I'm not talking about the first class passengers, right? Like I'm talking about just everybody else, right? That's going to hurt the airlines, right? Now it's finally coming out. Right, Delta, American, Southwest have cut their first quarter forecast. Right, and here's something even more interesting. If you want to go nerd out on the CPI report, go do that for yourself. You can go just and just type in like Consumer Price Index February 2025, and you can get this. But here's one part I want to share with you guys. Right, 4% decrease in airline fares. This is also why I don't trust the CPI report as much as some other people, because they can do, like, guys, they can fugazi everything out here, right? Like, they can make the CPI look however they want, right? Sometimes they'll add this thing in, put this thing in, right? And they'll make the numbers look however they want to manipulate the markets, right? So go in there. I'm not saying you need to go read this massive document, which nobody does, right? Because they wanted to keep us broke and stupid, right? So they make insane documents that no normal human being has even the time or brain power to read, right? So, but this is interesting. Right? 4% decrease in airline fares. Why are they doing that? Well, to entice people to go fly, because nobody was flying because of all the accidents that are happening. People are fearful. Like, that, it's not that difficult to understand. I'm watching this heavily. I'm watching this for an opportunity to once again Get into airline stocks at amazing, amazing prices. And I'm just watching. I don't do anything on CPI day. You guys know that if you're in like one of the free Facebook groups. All the links, by the way, are in the description to help you guys out with selling options. That's primarily what we do here. Sell options, collect premiums, hit juice buttons from the options buyers. That's what we do, right? We're not day traders. We're not Picassos or candlesticks. But that's interesting to me, and I'm watching this very, very closely, right? The airlines have been good to me in my investing career, and that's what I'm just watching it, right? They're trying to get people to fly, and they're decreasing airline fare. It's not hard to understand. Let's get our coffee. I told you there was like a lot of news this morning, guys. Like it's fun, and then at the other time it's not. So let's look at some stocks. Let's look at the big players. All right, Tesla under its 300-day moving average, massive, 45% dump in the last 3 months. All right. This is tough to say because everything took a pop up this morning with the CPI report, and this is why I don't like trading on CPI days, because it's like a temporary sigh of relief, and then you realize like you come back to reality and like, wow, things aren't really good. Under its not well under its 200-day moving average, and just under its 300-day moving average. That is my new like support and now like resistance level. So we're gonna see, right? Like, so you now want to like look at like, hey, are we bouncing? Are we having a resistance off that 200-day moving average? Are we having a resistance if it's below the 300? Is it using that now as a resistance level, right? Or is it using it as a support level? Right? These are things you have to pay attention to. That's why I tell you guys, like, only pay attention to a handful of stocks, because you don't got the time, especially if you're working or running a business. You don't have the time to look at this all day long. But we're going to see, right? We're testing it right now. We're testing it. Are we going to resist it? And I don't know. We'll see. Again, I think there's a lot of positive sentiment right now in the market with CPI, so we'll see. Still massively oversold. I mean, if you're wanting to do cash secured puts on Tesla, you could probably get amazing juicy premiums. Let's just even go take a look at that. Let's go take a look. Tesla right here. Go over to our trade options, sell, put. Even if we go, let's go out to like a 36-dayer. Oh my Lanta, these are gonna be big. Look at these. Holy crap. Like if you bought Tesla at like a $400, like why wouldn't you do cash secured puts like at like 200? And look at this return that you're getting. $740 you're going to collect from an options buyer today. Let's like that's insanity. That's insanity. I mean, and that's what, let's see what's our delta here, 0.18. So only about 18% share. Again, with this market, you kind of have to take this stuff with a grain of salt. I mean, listen, the Greeks, in my opinion, all of the technical analysis, Greeks, all of it is BS. It's all BS. I'll probably be the only person that tells you that here on YouTube. It is all BS and a fugazi to make ourselves feel better, but it does help us build a thesis. But as we have seen, things can quickly turn. At the end of the day, you just have to pick a strike price that you would be comfortable owning the stock. I can't stress it enough. That's it. Long term, are you comfortable holding this stock at this price? Okay, all the fundamentals, technical analysis, sure, that's fantastic, and it's nice to build a thesis, making sure you're collecting the most amount of premium, you're squeezing them as much of that juice as you can. But at the end of the day, is it a stock at a price that you wouldn't mind holding? That's the only thing that freaking matters. I cannot stress it enough. Okay, so if you're buying Tesla at $400 and you believed in it and you don't believe in it now, that's your own. That's your problem. I don't know what to tell you, man. Like that you go. Yeah, I don't know. But taking a look at Meta, I'm actually, I'm not a big investor in Meta, but it's interesting that Meta isn't feeling this at all, right? But because a few years ago, this company was getting freaking beat up, just absolutely beat up. So it's interesting how this one, it's a positive thing, really, that Meta is actually able to stay well above its 200-day moving average and obviously 300-day moving average. So and having a great jump up this morning too as well. So it's nice. Like if we just let's look over the past year. I mean, still up over 25%. I mean, a few years ago, man, this thing was just getting like beat to death, man. I was doing some cash secured puts back then around this that 2022 time when we were in that bear market, but my gosh, I mean,
wild to see that it's not really seeing much of an impact here. Again, we're, take that information. Google, again, a big one that's going to be testing that 300-day moving average, trading actually below it. Actually did not have a nice pop this morning. Wild, because I think this is the biggest. I think Google in this thing, like this bear market, Google and Nvidia are mine. Like that's the ones I'm really focusing on. Now I have a couple other ones like Arista, SoFi, yes, but like overall long term, I will not be upset holding Google and Nvidia long term. I just will not be. Especially Google is number one on that list. I will not be mad holding Google long term. I know eventually Google will hit all-time highs. Like it just will, right? It's interesting that it's still trading well below that. We saw all these other companies have a nice little pop back towards their 300-day moving average. So obviously a great setup for Google here. Let's take a look at some of the premiums that Google is handing out here, or options buyers are handing out here, selling puts, and then we will go out to, let's just go out 36 days because we like to be 30 to 45 days out. Still some pretty juicy premiums. 150s, you're collecting $225. Let's take a look at that, what that return is like on us. And what do we say, the 150s? So 1,500 or 15,000. Collecting about 1.5% return. Not bad. And getting in Google at 150? Hey, not bad, right? Obviously, you could go more aggressive to like a 155, right, and collect 330 and more. But you know what? That's where you have to make that decision for yourself. The more aggressive you are, obviously, the more premiums you're going to be, and the more return you're going to get on your collateral. Okay. And then obviously Nvidia, guys, look, it had actually a very nice bounce. It was trading below, right? It was trading below its 300-day moving average and then had a nice little pop-up, right? That's really, really good sign for Nvidia here as well, but still an amazing territory for those cash secured puts. And then AMD, poor AMD. Look, you don't see this often. You don't see it often where the 300-day moving average is above its 200-day moving average. Poor AMD, man. Poor AMD. Just getting beat up. I still believe in it at under 100. I think again AMD will recover as well. Guys, I hope you enjoyed today's video. Check all the links in the description. If you have no idea what I'm talking about with collecting premiums, there's a workshop down below. It's about 60 minutes on it that's going to teach you everything you know, how to squeeze some juice and hit that juice button for yourself from those silly options buyer without staring at charts all day or risking a ridiculous amount of money. But guys, again, remember, sell options, collect premiums, repeat. I will see y'all tomorrow.